forecasting, it has you in a proactive position, and you're looking at all of the ways money will enter your company and all of the ways that money will leave your company. A budget, in most cases, you're only focused on the revenue and expenses, and is what you desire. A forecast is what you know that is going to happen with a 90% accuracy rate when you forecast for your business. I recommend you have both, because your budget is your plan and your forecast is letting you know what your cash flow and your profit will be over the next day, week, and month in your business.
You're listening to the Black to Business Podcast, an educational podcast providing Black entrepreneurs with the tools and resources to start and grow their businesses. We chat with vetted Black entrepreneurs, thought leaders, and business owners as they provide tips and resources to help take your business to the next level. I'm your host, Monique T. Marshall. Hello, and welcome back to the Black to Business Podcast, and also Happy New Year. So today we're diving into a very important topic to start the new year off with a bang and a bag, and we are discussing money. Not only are we discussing money, but most importantly, we're discussing profit. I mean, it's cute and all to be generating sales, but it's even better to make sure that you're actually profiting and have an excess cash flow in your business. We also know that tax time is just around the corner, so we want to make sure that you are prepared. So today we've invited financial consultant and founder of Say Yes to Profits, Octavia Conner, to discuss all things money and profiting first in your business. The cool thing about Octavia is that not only is she an accountant with over a decade of experience, but she also has a track record of helping over 90% of her clients grow between 30% and 350% within a year, and reducing their tax liabilities by 60% or more. I mean, wow. And to back it up, she's been recognized as a top 50 accountant in North America. I mean, come on, who better to discuss this topic than her? During this episode, we're diving into how to set an ideal profit goal in your business, how to price your products and or services for profit, and how to keep operating costs low in your business, and so much more. So let's get into it. So Octavia, welcome to the Black to Business Podcast. This show is a special treat, so thank you for being here and welcome.
Thank you so much for having me. I'm super excited to be here today.
Of course. So I always like to let my audience know who I'm speaking with so that they can get a little familiar with you. So if you don't mind just sharing briefly a little bit of your story, tell my listeners how you got where you are today and what is it exactly that you do in your business.
Okay. Well, I am Octavia Conner, and Say Yes to Profits is a virtual CFO firm that helps consultants and entrepreneurs gain clarity, control, and confidence in their finances so that they reduce business taxes and say yes to profits. It is a play on words. I am an accountant. I've been an accountant now going on maybe like 15 years. And I started in the corporate space. I climbed the corporate ladder, and then I kind of got to the point where I was like, well, if I can help businesses on this level build $1 million and $1 billion companies as their virtual CFO, I can do it for myself and I can do it for others. And I decided to take a leap of faith, and I jumped out there, and I went through, a struggling stage, but I look back on it now and feel like it was all for a purpose. And here we are today at Say Yes to Profits.
I love it. And just so people know who are listening, like she said, 15 years. So we have a vet on the podcast. She knows what she's talking about. So that's why I'm even more excited about today's topic. So Octavia, thank you for sharing that. I want to start with, I know we're at the top of the year, and one of the things people like to do is set goals, and in business, financial goals, and we always need to have profit at the top of our mind. So I first want to talk about understanding profit. If you could just talk about what profit is and what it isn't when it comes to business.
Of course, of course. So profit is what's left over after you have subtract your expenses from your revenue. What you desire to have is a net profit. What could possibly happen is that you could have a net loss, and that means that you've spent more money in expenses and cost of goods sold than you've earned in that month or that period of your business. So you always want to focus on your bottom line, which is profit.
Amazing. And Octavia, I know one of the things you talk about is a lot is having positive cash flow. So I want to talk about how you advise a business owner to maintain a positive cash flow.
So that is a really great question. And one of the things I would say for business owners is that you want to set 3 money goals in your business, and then you want to keep an eye on the 4th. And let me tell you what I mean. So the 3 money goals would be your revenue, cash flow, and profit. And then you always want to keep an eye on what your tax liability will be. A lot of business owners make the mistake of only focusing on revenue, and then they'll achieve the revenue goal, but still feel like they don't have enough cash flow to operate their business on a daily basis. So my recommendation would be to think about your revenue and then think about, well, how much of this would I like to have left over at the end of each month, at the end of each quarter, at the end of the year? How much of the revenue earned would I like to have left over? And that's going to tell you your ideal profit goal. Now, when you have those two numbers, you will then understand what your cash flow should be. And then on a weekly basis, on a monthly basis, you want to monitor your cash flow to make sure that you have an excess of cash flow at all times.
Love it. Love it. And one of the other things that you discuss a lot is the fact that people should have a set bank balance amount that their account shouldn't go below. And I want you to dive into how do they determine that number, but also why that number isn't $0.
You know, this one is really key because I call it, and I teach my clients a strategy that I developed called the new zero number, right? And your new zero is no longer zero, because once you reach zero at your bank balance, you're in trouble. And honestly, you were in trouble before you got to zero. So what I tell my clients to do, we go through this annual planning session. We were doing them in December. We have some to finish in January. But when we do the annual planning session, I tell them, for your operating account, you should have a new zero number. So your new zero should be at a minimum 1 month worth of operating capital. Again, I want to stress that I am stating at a minimum, because ultimately you want to have 4 to 6 months of operating capital saved in your business at all times, right? If COVID 2.0 happened, how long can you last if everything shuts down again? So your new zero number is 1 month worth of operating capital at a minimum. And that's going to be in your operating account for your business.
Okay. So now let's talk about, I think you did kind of mention it before, but I just want to, circle back on that. What are some of the key metrics and numbers that should be being tracked in business when it comes to finances so that they can make sure they are positively trending?
So some of your key metrics would be your total revenue needed to break even and your total revenue needed to generate your desired profit. If you are a business that have billable hours, meaning some of your team members, you bill for the time that they spend to provide the services to your clients, then another key metric would be how much money each employee is earning. So the revenue per employee, the revenue per billable employee, and the revenue per non-billable employee. The great thing about knowing these numbers is that it will let you know how many clients or projects or services you need to offer in order to make sure that you are covering your billable time. Another great metric, of course, would be your profit margin. And you would want to know your profit margin by client, service, or project, because that will let you know if your services and your products are priced for profit. And I would say another great metric would be the total employee salary. So how much do you want to make sure you have in, like, for example, a payroll account each month to cover your total salary for your team? And I want to make sure I stress here that as a business owner, you want to make sure your CEO salary is included in that number. And what I have found over the years as a virtual CFO is that a lot of entrepreneurs will not include their salary as the CEO, and that is a huge mistake.
Oh, this is so good. I'm learning so much. Because you talk about the different, one of the things in profiting and profiting first is, having your operating expenses or just different buckets for your business. What is your advice around that and specifying if there are different buckets, or what do you recommend?
Well, honestly, when you think about the different buckets of your business, it all depends on what you desire to track and what you desire to improve. Because you can have, for example, a revenue bucket and the components of that bucket or the things that belong in that bucket. So, for example, you know that in order to bring in more money into your business, you need to secure more clients, where a bucket could be how many clients do you need to secure on a monthly basis. Another bucket could be your closing ratio. So, for example, if you know that your closing ratio is 50%, meaning 50% of the people that you speak with, you sign them as a client, and you know that each month you want to sign 3 clients, for example, that means that you need to speak with at least 6 clients per month because your closing ratio is 50%. And you can honestly get really, really granular with this, because the next thing that you could look at, and we're still in this revenue bucket, could be, okay, how do you secure more potential clients? Is it video? Is it networking? Is it speaking? So when you know that, then that'll tell you how many videos you should do, how many lives you should do, how many speaking opportunities you should have, how many social media posts you should have. So in that one revenue bucket, I would say in closing, you want to deep dive into how do you earn money in your business and what it in every way, right? How does money come in your business in every area of your company? And then what must you do to improve each of those areas?
Fantastic. Okay, so let's talk about the differences between budgeting and forecasting. I know that's something you also talk about, so dive in.
Yes. So this is a part of, as a virtual CFO that I love. So budgeting, right, is a best guess estimate of what you want to happen. So you're going to create a budget for this year. And the budget is going to be over the next 12 months. And the budget will be broken down by month. So, in the month of January, you want to earn this amount of revenue and you're going to spend this amount in expenses. And this is going to be your desired profit. And you do that for each month, and then for the entire year, right? That's your budget, a best guess plan, a best guess estimate of your revenue and your expenses. A forecast, however, is what you're looking to happen on a daily, weekly, and monthly basis. So let's say that you're forecasting and you're pretty sure that next week you're going to bring in $10,000, and you know that your expenses come out next week, right? You know that salary is due or payroll is due next week. So your forecast is that I'm forecasting that this is the money that's going to come in cash flow and revenue. This is the money that's going to go out in cash flow and expenses. And this is going to be my cash balance and my profit balance. The biggest difference, again, I would say would be forecasting. It has you in a proactive position and you're looking at all of the ways money will enter your company and all of the ways that money will leave your company. A budget, in most cases, you're only focused on the revenue and expenses and is what you desire. A forecast is what you know that is going to happen with a 90% accuracy rate when you forecast for your business. I recommend you have both because your budget is your plan and your forecast is letting you know what your cash flow and your profit will be over the next day, week, and month in your business.
Mm. And then I know when it comes to like there are budgets, templates and things out there. But what does a forecasting template even look like?
So great question. So I actually have a forecast template on my website that everyone can go and download for free. But to give you some of the components, right? Your forecast will be created by week. And then at the top of the forecast, you're going to have cash in. And you're going to list all the ways that cash would come in, whether revenue, whether owner's investment, a business loan, a business grant, all of the ways that cash is going to come into your business. And you're going to total that. And then you're going to have cash out. And cash out will be every way that money is leaving your company. And this could be expenses. It could be loans payment, credit card payments. It could be the owner's salary that is not coming out in payroll and any other ways that money is leaving your company will be in cash out. Once you have your cash in and the total, and you have your cash out and the total, that's going to tell you your cash balance for that week or that day. And you continue to do this every week or every day in your company. And you always want to remain cash flow positive.
Yes, I love it. And, for someone who's listening, they're like, oh my God, this is amazing. Or someone else who's listening this seems like a lot, but I think that the overall thing that we want you to get is that this is best for you to know how you're trending properly and also creating that profit that you need to be doing. So this is necessary in order for you to get to that place or continue to be in that place.
Absolutely. Absolutely. And again, you want to be cash flow positive. And the great thing is, in a lot of times when you are creating your forecast and you are cash flow positive, if done correctly, you will automatically say yes to profits, right? You will automatically have a net profit in your business if you are proactively managing your cash flow.
Yes. And saying yes to profit is not just saying it. It's like she said, being proactive. So I love that. So Octavia, would you say either of these or are like setting those financial goals and tracking these goals, or what would be the difference if there is one, you would say?
Honestly, there is not a big difference, right? Because if you set your financial goals, and like we mentioned before, if one of your financial goals is to earn X amount of dollars in revenue and have X amount of dollars left over in profit, then you're automatically going to know what your cash flow needs to be. And then when you're doing your budget and your forecast, you're making sure that your business operates in a way where you achieve your goals. So it all honestly works together.
Yes, I agree. And so one of the questions we often get, and I know a lot of people ask about, and it's especially important when it comes to making a profit in your business, is knowing how to price your services, your offers, and to make sure that your business is making that profit. So what advice would you give people on how to price their services and offers?
Oh, this is a great question, and I love to talk about this. First thing, you want to price for profit. And what does that mean? When you create your prices, you want to make sure that you have a profit percentage in your price. Right? You don't want to think at the end, after everything is done, did I generate a profit? That's the wrong way to operate. You want to know without a shadow of a doubt that your services are priced for profit. So you are generating a profit with each sale that you make in your business. So you're probably wondering, well, how is that done? When you price your services for profit or products for profit, of course, you are to include all of the cost that is needed to provide that service or product to your customers. But once you have that cost, then you want to add a percentage. So if you want to have 20% of a net profit left over after all is said and done in your business, after you've spent money and everything, then you want to add 20% to your pricing formula. And then when you earn that money, another key thing would be to take that 20% and sit it to the side in a separate account, because that's for your profit. When you operate in that way, you know you're generating a profit. It's not a guessing game. It's not, okay, I wonder, have I generated a profit in business? You automatically know because you're including that profit percentage in your price for your services and products.
I love that. I love it. And it's knowing your numbers. Yes. And I want to talk about, when you say the profit percentage, something about, people, if determining if they can or cannot afford to offer a discount. I think that's one of the things we don't talk about enough, is like, can you afford to offer a discount and what that looks like? And what is your advice around people who feel that they need to, but they can't actually afford to?
Honestly, when I think about discounts, it is if you want to provide almost like a gift to your customers. Like, a lot of business owners think they have to offer discounts, and you do not, right? And if you are in a position where you're struggling cash flow wise, you're struggling to have enough money to cover your expenses throughout the month, then offering a discount, I would say, is not going to help you. It's more sort of going to hurt you, because in that position, you want to make sure you have an excess amount of cash flow. And when you offer a discount, you're taking away from the money that you need to operate your business. So I guess to answer your question, it would be, if you're in a cash flow struggling position, if you haven't been able to have a net profit in your business, if money is a problem in any way, shape, form, or fashion, then offering a discount, I probably would say I would want you to think twice before doing that. You do not have to offer a discount. Sometimes you have to stand flat-footed in the fact that these are my prices. I know the value that I bring to the table, and I know that my prices are reasonable, and I'm not going to offer a discount at this time. You do it when you feel you want to, not because you feel you need to close a service or sign a new client. Is when you feel you want to offer a discount. And again, if you're in a cash flow profit struggling stage, then it may not be best for you to offer a discount at that time. You offer a discount when you're in excess, so that that's not going to hurt your cash flow or your business in any way, shape, form, or fashion.
Well said. Well said. And what are some of the common mistakes that you see business owners make when it comes to managing their finances in their business?
One big mistake is not factoring in the salary that they need to pay themselves as a CEO. Oftentimes, business owners will leave that out. And that is a huge mistake. When you create your budget, when you create your forecast, when you look at your money, period, you want to make sure that as a CEO, you're receiving a reasonable salary, because honestly, you're the hardest working person in your business and you should be paid for it, right? The next thing I would say is not keeping your accounting records in order and waiting until the end of the year to figure out your tax liability and to figure out what happened with your money. If you wait until the end of the year, you've missed out on so many things that you could have taken advantage of if you kept your bookkeeping in order and up to date every single month. And by the end of the year, when you think about your taxes, a lot of times it's too late to implement strategies that could have saved you hundreds of thousands of dollars if you would have been proactive instead of reactive. And I would say the final task would be not having a budget and forecast and not monitoring those consistently.
Mm-hmm. Yes, I definitely agree with that, which brings me to my next point. You mentioned like proper bookkeeping and accounting and just waiting to the end of the year to submit these things. I want to talk about who are and what are the key players that people need on their team in order to manage their business finances. So whether it be a bookkeeper, accountant, Excel, spreadsheets, software, your thoughts on that?
Great question. At a minimum, a bookkeeper that can keep their records up to date and they don't have to do it as the business owner.
Mm-hmm.
And then once the business is at a place where the business owner feels as if bookkeeping is not giving them the strategy and the insight to make wise business growth decisions, to make strategic financial decisions that's going to propel their company to the next level, and they need more of like someone that could read the finances and really help them understand what the numbers are trying to convey, then they need a CFO, because a CFO will help them create a strategy around the numbers. A CFO will help them understand clearly their financial position and how to use that information to accelerate their business growth. So I would say a bookkeeper at a minimum, and then a CFO. And sometimes they can find this one person that can handle both, or one company that has a bookkeeper and a CFO for them, and they can keep everything at that one place.
Love it. Okay, so one of the hot topics, of course, top of the year here, and people want to get it right at the start of the year, is those taxes. So I want to talk about just dive deeper into that, and if you could break down taxes and how it works. I like to real basic for someone who's just learning about this. Break down taxes and how it works as a business owner. The differences between your personal tax maybe and your business tax.
Okay. So when you think about taxes, right, if your company is, I think the easiest way to explain this would be to think about the structure of most businesses. So you have a sole proprietor, an LLC, S Corp, and C Corp, right? So if your business is an LLC, for example, you are taxed on the net profit that you generate in business. So you take your expenses minus your revenue. That's going to give you a net profit if you earn more money than you spent, or a net loss if you spent more money than you earned. If you are an LLC, again, you are taxed on the net profit at 15.3% at a minimum as of the date of this recording. The 15.3% is self-employment taxes. So at a minimum, you will look at your net profit and multiply that by 15.3%. And that's going to tell you ideally what your business taxes will be as an LLC. Now, because you are an LLC, when you file your taxes, you'll have your business and personal on the same tax return if you are a single member LLC, because as a single member LLC from a federal level, you're considered what they call a disregarded entity, right? So you'll have your business and personal taxes on the same return, but you will absolutely know what your business taxes will be, which is that at a minimum 15.3% of your net profit. And then once it all comes together on the top form for your taxes, which is your 1040 form, you'll then know what your bottom line tax liability would be, and that'll factor in other personal things. If you are an S corporation, your business and your personal is separate, and you are not taxed, or taxes are not levied at the corporate level if you are an S corporation. As the owner, you will receive what is called a K-1 based on your percentage of ownership into the company, and then you will take that and file your personal taxes. But when you file your business taxes as an S Corp, there are no taxes on the net profit that you generate as an S corporation. It is taxed on your personal. Yeah.
Love it. Love it. Love it. Love it. Thank you. Thank you for breaking that down. Cause I know that's a common question and, people get, I guess, intimidated when it comes to taxes and all of the financial talk. So thank you for breaking that down. And I want to talk about some of the common mistakes you see business owner makes when it comes to filing their taxes and touching on tax deductions and such.
I would honestly say one of the biggest mistakes is waiting until the end of the year to figure out their tax liability. This is the perfect time of the year to sit down with a tax accountant or your virtual CFO and identify what your potential tax liability will be for the end of this year. And then each quarter, you want to either pay quarterly taxes, one, or two, you want to identify, okay, this is where we stand this quarter for taxes. This is what we're looking to have in tax liability by the end of this year. And you want to monitor that consistently. And then as you're spending money in your business, you want to strategically spend on those items that will yield a tax deduction for your business. In order to do that, you have to have your bookkeeping in order and up to date consistently. Like, for example, we meet with our clients once a month, every single month. That's a requirement as their virtual CFO. And in the midst of that conversation, we have a tax chat. And we're talking about their tax liabilities. We're showing them, okay, if you spend on this, your tax liability will be that. If you invest in this, your tax liability will be that. Like, we're doing that throughout the year, almost every single month, so that when they get to the end of the month, taxes is not a stressful thing. They have spent enough so that they reduce their taxes to the smallest amount possible. They've invested enough, again, so that they reduce their taxes to the smallest amount possible. So I would say the biggest thing would be keeping your bookkeeping up to date and knowing at all times what your potential tax liability will be and strategically work to reduce that to the smallest legal amount possible.
Awesome. And what advice or tips on people who are looking to hire like freelancers, contractors, and things like that if they are single members or a small team?
Well, honestly, they just want to make sure that they have the paperwork in order. And they also want to make sure that they are operating in a way where that person is really a contractor, right? A lot of times business owners will hire a quote unquote contractor, but actually operating with that person like an employee. And if found out or discovered, they can get into a lot of trouble. So I would say making sure that they have all of the information in order, because if they pay a contractor more than $400 within 1 year, they are required to issue them a 1099 by January 31st of the following year. So now is a great time for that. And then also just making sure they operate in a way where that person is actually a contractor and not an employee.
Yes, yes, yes. So before I ask, the next question is around someone is listening and they're like, I would rather avoid all of these money issues, or I don't want to deal with it right now. What advice do you have for someone who's feeling overwhelmed? They know they need to take the right steps, but they're having those issues, taking it head on and avoiding fixing their money problems. So what advice would you have for them to deal with that?
I would tell them to hire Say Yes to Profits.
Plug.
But honestly, I would tell them to get with an accountant ASAP. It's not uncommon for a business owner to not want to deal with the financial management piece of their business. Is not uncommon, right? You got into business to do whatever it is that you love to do, and the finances and the taxes, that's more than likely not part of it. So my recommendation would be to hire an accountant, hire a virtual CFO ASAP, but not just anyone. They want to hire someone who, one, cares about the success of their business and not looking at them like, just another invoice or another dollar that's being made, but someone that will strategically guide them, that will help them plan, and that will hold them accountable and keep them in the know. Even though you don't want to do it, you still should know what is going on with your money at all times. So you want to make sure that the person that you hire, make it a priority that they're meeting with you consistently, and you understand the finances of your business. You have that clarity, control, and confidence in your numbers, even though you're not the one that's physically handling the numbers every single day.
Yes, yes, yes. And I want to talk about the cost of doing business. If you could discuss some of the tips to keeping those operating costs low in business.
I often say, if you don't need it, don't spend it. A lot of times we, have these subscription purchases and we are investing in this and investing in that. And one is not yielding a return on the investment and it's not needed. So I will tell my clients, I do something with my clients every quarter called a audit trail. And I changed the name. It's called a profit finder, right? Exercise, but it's really, we're just auditing their expenses. And I asked them 3 questions. One of the questions is this needed to operate your business? And they can only answer in 3 ways: yes, no, or it could be lower. If they say no, then they have literally 30 days to stop spending money in that area, right? If they say it could be lower, then we as a team have 30 days to do cost analysis and see how we can get it lower. If they tell me, yes, this is absolutely needed, then I follow up with what is or what has the return on the investment been for this purchase, right? If the client cannot tell me or we cannot determine a return on the investment, then more than likely it's actually not needed and we need to figure out how to stop or get it lower. So I would basically say, when you think about operating costs, everything that you spend your money on, you should be auditing that costs or those expenses and determining if they are truly needed to operate your business. And then sometimes before you make a purchase, do a 24-hour hold rule where you wait 24 hours before you make that purchase. You sleep on it and everything, because sometimes you think you need it in that moment. It's the shiny object syndrome. And then you sleep on it, you wait a day or two and you're like, okay, I really don't need that. So now you save money in your business, which will flow to your bottom line, your profit.
What about those Black Friday deals? Those, like dealing with those. Oh, you only have a couple of amount of hours to deal with it. But yeah, I agree.
That's the shiny object syndrome.
Yeah.
So you got to pause. Sometimes you got to take a step away and ask yourself, is this truly needed? Because even though it's Black Friday and they're saying, the sale going to go off, Friday at 12 p.m. or Monday morning, you still need to ask yourself, is this really needed to operate my business? Is this going to make me have more money, more time, more expertise? If not, then your Black Friday sale was cute and cool, but I don't need that right now.
Right. Love it. And Octavia, what are your thoughts on business loans, business credit, building business credit? I want to talk about that.
Well, I definitely think business owners at some point should have business credit. Oftentimes you can receive more things when you have business credit versus personal credit. However, you have to use credit responsibly. And as far as business loans, I believe in being cash positive, and you do not want to have a business loan if you really, truly, truly do not need it. And on top of that, if you are experiencing money troubles, a loan is a temporary Band-Aid that is going to come off. You have to get to the source and the bottom of your money troubles, because if you add a loan on top of that, you eventually have to pay that loan back. Or if they call the loan and you don't have the money, you're in trouble. Or if you have more liabilities, more loans than you have in assets, you're in trouble. So I'm very, very cautious with having clients get business loans. I would rather fix your money problems, fix your cash flow problems before we add another money problem onto it. Because again, you'll get temporary relief, but when that payment starts and you haven't fixed your money problems, now you got the loan that you have to repay, plus the other expenses and cash flow things going on in your business that you haven't fixed. So you're still in a struggling stage. And sometimes you're worse off than you were before you got the business loan.
I definitely agree. Definitely agree with that. And one of the things you mentioned before is that one of the common mistakes you see is people not factoring in paying themselves. So I kind of want to talk about how should people go about paying themselves in their business, defining what that number is, getting to that number, any recommended tools or systems?
Well, I think you have to, let's say this. Okay. If your business is an LLC, right? When you pay yourself as the owner of the company, you can't pay yourself through a payroll and do a W-2 as an LLC. As an S Corp, you are a separate entity from your business. And as an S Corp, you have to pay yourself what the IRS calls a reasonable compensation, right? Your reasonable compensation is based on several different factors. And for our clients, we do a reasonable compensation analysis based on the IRS court cases and things like that. And that gives our clients what their reasonable compensation should be. What you want to do if you're unable to do something like that is think about your years of experience, your technical title, and what someone in your area with your years of experience with that technical title would receive. And that could give you like a base of what your salary should be. And then you want to build your business to the point where it easily can afford your salary, your team's salary, and still generate a profit on top of that. And then you want to pay yourself on a consistent basis every Friday, every other Friday, twice a month or once a month. You want to make sure that you're paying yourself consistently, you're paying yourself a reasonable amount, and that your business can afford it effortlessly.
Yes. And for those who are listening, who are maybe they are just getting started and they're not seeing a profit yet, but they want to make sure that all their ducks are in a row, or those who have been in business for a little bit and, they're still not seeing any green. What advice would you have for them when it comes to tax time? First tax time.
Well, you want to keep track of everything because even though you may not be generating a profit at this time, you still more than likely have tax write-offs that will benefit you. Sometimes when your business is performing at a loss, it actually sometimes helps when you file your taxes, right? But you have to keep track of everything. So I would say just making sure at the base, at the foundation of the finances for your business, whether you are a startup or not, is having a solid, reliable accounting system in place.
Okay. And I know Say Yes to Profit specializes in helping consultants and service-based businesses. One of the things you mentioned, pay the smallest legal amounts possible in taxes. In what ways are you able to do this?
So we go back to the tax deduction, right? So one of the things we do for all of our clients is when they first come on board, first we review their previous year's taxes, no matter who completed the tax return, because we want to make sure that they didn't miss out on anything. The second thing that we do, we get their bookkeeping in order. Right. Mm-hmm. So we build their financial system for them. We build out their accounting system. If they have one already, we go through and we clean it up. We make sure that it's right. We make sure that it's in compliance with the IRS. And then on a consistent basis, we monitor that. We're doing the bookkeeping for them. And then we also create an annual plan, because if a client comes and they say, well, Octavia, I want to cross the $1 million mark next year, or I want to earn 300,000, 200,000, 500,000, then we do an annual planning session where we identify exactly how they are to achieve that. And that's what we hold them accountable for every single month, in addition to getting their bookkeeping in order. So again, I think the basis of everything is having that financial system in place. Like that is the heartbeat of your business.
Yes, I definitely hear that. And I know people who are listening, they're thinking, that sounds amazing. Like these are the things I know I need to do, or whether they choose to work with Say Yes to Profits or someone else. What are some of the expected expenses or costs that they can expect to incur, like a budget or range amount for when outsourcing these things?
So are you referring to the cost of like accounting services
Yes.
or okay. So it all depends on their business. It all depends on the volume and what is needed, because they can get a bookkeeper for a very low cost,
Mm-hmm.
and their sole purpose is to kind of keep their books up to date, right? And then that bookkeeper can charge them based on the number of transactions, based on how long it takes them to complete the bookkeeping on a monthly basis or on a weekly basis. So I couldn't really give like, this is the ideal cost, but
Mm-hmm.
I can say it's based on their volume. It's based on what they need from an accountant, because they can need different things. They can need just their taxes being done. That's a different rate. They need maybe a bookkeeper on a monthly basis or a bookkeeper on a weekly basis. That's a different rate. So they have to get crystal clear on what they feel they need and what accountant they need on their team, because while all of us may call ourselves an accountant, we all can do different things, like a bookkeeper versus a general accountant versus a tax accountant versus a CPA or CFO. So we all do different things, but we're all accountants.
And if I was a business owner, someone who's listening, wanted to work with you, how would you be able to help me?
Well, I would say first, I always say go to our website, look at the different videos and articles we have, look at our client testimonies as well. And for us in particular at Say Yes to Profits, we focus on 4 key areas in helping our clients improve 4 key areas: revenue, cash flow, profit, and taxes. And the one thing that I ask my clients or potential clients, where do you see yourself 12 months from now? Because at a minimum, our clients work with us for at least 12 months at a minimum. So I'll ask them, where do you see yourself 12 months from now? What does that look like for revenue? How many team members do you want? How much money do you want to have left over in your bank account? And when they tell me that, that is like the foundation for creating that plan for them and for holding them accountable, because within 12 months, we want you to get to where you saw yourself when we first began. So we focus
Right.
on those key areas, and we focus on helping them take the steps and the strategies and the systems that they need to get there.
I love it. So, Octavia, this has been so valuable. I've learned a lot. I'm sure people who are listening have learned a lot. As an entrepreneur, do you have any favorite tools or resources that you've used to help you in your journey?
Yes, I have books. I love to
Yes.
read books. One of my favorite books of all times is called Traction. Um, I forgot the author's name, but I mean, if you go to Amazon, it is a best-selling book. I love that book. Also Michael E. Gerber, I believe I'm saying his name right, The E-Myth Revisited. That's one of my favorite books of all time. And a tool would be, and this is strictly from a accounting financial perspective, but a forecast. A forecast, it can be a game changer. A forecast could be the number one thing that position a business from struggling and feeling like, I have more month than money and I'm desperately trying to get on the right side of my cash flow. A forecast, if monitored and set up correctly, will get you there.
Love it. And Octavia, it is the start of the year. We want to get off to a fresh start. Any encouraging words? I think a lot of people deal with money issues around when it comes mindset when it comes to money. And if you do have any kind words or just any advice for people to, making sure that they're keeping profit at the front of their mind, what would you say? Any more advice or tips?
I would say work on your money mindset every day. Sometimes when we want to get to the next level, it's not the economy or the industry that's stopping us. Sometimes it's our money mindset and the money blocks that we have. So I would say every day keeping, not making everything all about money, but keeping it at the forefront as far as if I want to have an impact on the world, if I want to make a difference, if I want to serve as many clients as possible, whatever your dreams are, whatever your goals are, it's going to take money to do it. So just making sure that you work on your money mindset consistently and making sure that you think about profit and cash flow and revenue consistently.
And speaking of making an impact, what does it mean to you to be Black in business?
In business to me means power. We need more people that look like us that are making money moves to reach back and to help others that look like us. It means power. It means freedom. It means helping to elevate our people at all times.
Yes, I felt that power. Well, Octavia, you are so powerful, and I'm sure people are going to want to know how can they connect with you, how can they support you. So if you could share with the audience how to do.
Yes, so they can find us every single week on YouTube. First, I do weekly YouTube videos. I am I just bring my personality in helping business owners understand finances. It does not have to be boring. It does not have to make your eyes roll over. I'm just me. And I bring that to the screen every single week, at least twice a week. So if you go to YouTube and you search for Octavia Conner with an ER or Say Yes to Profits, we will come up. Please subscribe there and join us. And also on Instagram as well at Octavia Conner _ as well as Say Yes to Profits. We have 2 profiles on Instagram, and I'm on Instagram on Octavia Conner _ probably every day or at least 4 to 6 times out of the week.
Love it. And you are right. Your videos are very interactive and they're not boring. So she has the effects and everything going on. So please be sure to check it out. And, like her business is keeping those profits in mind and profiting first. Well, Octavia, this has been such a pleasure. And I really, really, really appreciate you for being on the show and really just giving us guidance step by step and really pouring into everyone. So we really appreciate you for doing the work that you did today. And all the time.
Thank you very much. And I want to leave one thing. I think one of the questions you asked, I don't feel like I kind of answered gave as much information as I would have liked. You mentioned tax deductions and tax write-offs. And while I answered the question, I just wanted to get a little bit more. When you think about tax deductions and tax write-offs for your business, you want to think about what is needed to operate my company, right? Every company is different. And for example, as an accountant, I know I need accounting software to operate my business, different types of accounting softwares. You want to think about it like that from your business and then determine if those are tax write-offs. In most cases, they probably are. But when you determine what your tax write-offs are for your specific business, as you're operating your business on a daily basis, you want to make sure you're spending in those areas. So I just wanted to leave you all with that because I felt like I didn't quite answer that as good as I should have.
Yeah. And I'm so glad that you added that because I think that a lot of people are like, okay, that's deductible or, like certain things that they wouldn't think are. Well, yeah. So I guess I do have a follow-up question to that is, what are some of the common things that people don't know are deductible?
Well, I would say one would be like your accountant, your marketing expenses. If you hire like a PR agent, I won't say any software, but the software is needed to operate your company. Also, if you send your team to a team training or events or something that's going to help them improve in their area of expertise, those are tax write-offs as well. And as a matter of fact, I have a tax form checklist that I give away for free. If you go to our YouTube channel and just watch one of the videos that discuss taxes, in the description, there'll be a link to download the tax form checklist. But just think of anything that is going to improve my business, anything that's going to help my business grow that is ordinary and necessary are more than likely a tax write-off for your business.
Love it. Well, see, we got so much today. I'm telling you, please check Octavia out. And again, she mentioned some free resources, but also if you would love to work with her, we'll be sure to put the information in the show notes, as well as that forecast sheet. So thank you again, Octavia.
Thank you. Thank you for having me. This was fun.
Talk about breaking it down. Octavia really did that. I mean, you've got the scoop on how to forecast, how to include a profit percentage in your price, how to pay yourself, and also the inside scoop on business taxes. This was good. And it makes me so happy that we have the pleasure of having such amazing experts in our community like Octavia on the show. And I love that she also shared that it's not too late to fix your finances. So be sure to check her out and all the resources she mentioned during this episode at blacktobusiness.com/77. Thank you again for listening and having us be a part of your business journey. And please share this episode with a friend who might also find value in this conversation. And if you're on social media, be sure to follow us and tag us and let us know that you're listening by adding us at Black to Business. Chat with you next week.